Less than P class equals data end equals 584, data start equals 80 greater than. Well, it's safe to say Monday didn't exactly start on a high note for the markets, after a brutal end to last week on Wall Street. With stocks plunging nearly 6% across the board, Asia stepped into the new trading week only to inherit the bloodbath. The core driver? Escalating tariff tensions between the US and China, effectively crumbling the long-standing Chimerica economic dynamic. Throw in a bit of stronger-than-expected US jobs data that no one really cared about, and we've got the perfect storm. Less than P class equals data end equals 1010, data start equals 586 greater than. Despite a brief rally in the US dollar following the jobs report, the Australian dollar took the worst of it, nosediving toward the 60-cent level. That's a level we haven't seen since COVID times. And it's not just a currency story here. It's tied deeply to China's retaliatory tariffs and commodity fears. Meanwhile, the euro attempted a mini-surge, but fizzled out around the 1.09 level after the initial NFP hype wore off. Less than P class equals data end equals 1387. Data start equals 1012 greater than. Looking at bonds, U.S. 10-year Treasury yields briefly dipped below 4%, giving a faint signal of recession panic, before rebounding slightly. The yield curve? Still screaming slowdown. And as for oil, well, that rally's dead. Brent crude's been slammed back to around $65 a barrel, after OPEC Plus announced new production quotas. Just like that, all of last week's gains evaporated. Less than P class equals data end equals 1741. Data start equals 1389 greater than. Asian equities didn't stand a chance. Chinese markets were closed for a holiday, maybe thankfully so considering the carnage. The Hang Seng's recent gains are now looking shaky, slipping toward the 20,000-point level again. Japanese markets were hammered too, with the Nikkei closing nearly 3% lower, and volatility in the yen just adding to the chaos. Less than P class equals data end equals 2034, data start equals 1743 greater than. Back home, the ASX 200 dropped 2.5% on Friday, but futures are already pointing to a 4.5% slump on Monday's open. It's the ripple effect from Wall Street, and the knock-on impact of Chinese countertariffs. There might be a relief bounce soon, but right now, it's looking like more pain ahead. Less than P class equals data end equals 241. O data start equals 2036. Greater than. Europe didn't escape either. The Euro Stoxx 50 was dragged down 4.6%, with support levels collapsing and momentum heading straight into oversold territory. U.S. markets continued their collapse too. Nasdaq Q and S&P 500, both registering their worst single-day losses in over 5 years. The so-called Trump-era pump and dump is living up to its name, now firmly in the dump phase. Less than P class equals data end equals 2795, data start equals 2412, greater than. Currencies saw a quick bounce against the USD following Trump's new tariff rhetoric, but that reversed just as quickly. Euro couldn't hold 1.10, the pound retreated, and commodity currencies like AUD got clobbered. The USD-JPY pair swung wildly, with yen strength dragging it down toward the 145 mark before a small recovery. But the fear is real, especially for Japan's export sector. Less than P class equals data end equals 3038. Data start equals 2797 greater than. And then there's gold. It had been the calm in the storm, but even that cracked, falling back below $3,050 and settling closer to $3,020. It might stabilize from here, but clearly, not even gold is immune when markets are in full risk-off mode. Less than P class equals data end equals 3235. Data start equals 3040 greater than. Tariffs are flying, currencies are tumbling, and stock markets are desperately searching for a floor. Strap in. It looks like this storm isn't passing anytime soon. Stay subscribed for more videos.